So today we're going to take a look at Bitcoin and MSTY, and then we're also going to compare a few of the YieldMax High Yield ETF tickers against their underlying and see how closely they are running together to see whether or not, if you owned the underlying versus the YieldMax ETF, which would actually be better, or are they running really close to each other? And then we'll finish the video right off with updating my spreadsheet, find out what those new real price per share values are, as we did earn some distributions, and we'll enter that into that spreadsheet and find out where we currently sit. Hello my friends, this is Legend. So today we're going to take a look at Bitcoin and MSTY. And as you can see right here, we're looking at Bitcoin, and it keeps hitting this resistance of about 64.7K. You can see that it seems to be a pretty strong resistance line because we have hit it before. We did break past it, but not for very long before we came back down and then started respecting that resistance line again. It did drop all the way down to this 59.2K, and now we're right back up to 64.7, and you can see it did come up really close to test it, and it just keeps bumping its head on that 64.7. We're currently at about 64.1 on a Sunday afternoon, but it sure would be great if we can keep chipping away at this 64.7 and eventually break past it. Because if we can break on past it, I think that's going to help MSTR to move up. And in essence, will help MSTY move up as well. So just to get an idea of where MSTR is setting, let's take a look at that chart and find out. And here we are on MSTR. And just like in Bitcoin, we've got this resistance that it keeps coming up, bumping its head, and then coming back down. It did come back up and looks like it tried to test that 101 yet again, but we are currently down below that 101. We really need MSTR to break past this 101 so that we can get back into this range of about 120 to 130 area. And that would be great. But currently we do have this pretty strong resistance at 101. And you're going to see a pretty close resemblance of this chart when we take a look at MSTY. And here we are on MSTY. And you can see it's pretty close to a same layout, right? Dropping down and then seems to be trading sideways a little bit. Because if we take a look at MSTR, we're trading sideways currently, and MSTY, we're trading sideways. And if I were to draw a horizontal line right here, that would look very similar to exactly what MSTR is showing, right? We are currently bumping again at that 101 for MSTR, and for MSTY, we're currently bumping that $13.69 line right there. But we need Bitcoin to break on past that resistance so that MSTR can hopefully break past its resistance, and by doing so should push MSTY on up as well. Now, before we go into comparing the underlying versus the high yield ETF, if you don't mind, hit that like button as it would be much appreciated. But let's just go ahead and let's pull that little sheet up that I've got and let's compare a couple of these high yield ETFs with their underlines and find out if they are running pretty close together, or are you just continually to lose money with the high yield ETF versus its underlying. Basically, would you come out better if you owned the underlying instead of the high yield ETF? So let's just go over and check it out. All right, so here we are on this little evaluation sheet that I've put together, and I believe I'm just going to end up adding it to the high yield stock tracker sheet that is available to all my Discord members. So within a week or so, I will get this added into that so that you can go in, evaluate your current positions between your high yield ETF versus the underlying, and to find out, are you keeping up with the stock or are you just continually to lose out if the price continues to drop? So the first thing you want to do is, of course, enter in your tickers that you want to compare. And the first one I'm going to start off with is MSTR, and that's the underlying for MSTY. So the little gray cells, of course, is the ones that you enter in your information into. And then the start date, we're just going to do it from the beginning of this year. We'll start off with January the 2nd of 2026, and we'll just go right up to July the 10th of this same year. So as you can see, it pulls in the closing price of that start date and the closing price of the end date. Gives that percentage loss or gain of that price movement of the stock ticker. And you can see right here, MSTR, the closing price on January 2nd was $157, and the closing price on Friday was $94. And the same goes with MSTY. It had a closing price on January 2nd of $30 and a closing price on Friday of $12.83. So you can see that MSTR dropped 39%. Okay, that's a pretty good drop. But look at the drop on MSTY. It dropped 57%. Ouch, right? I mean, that's a lot. And that's a huge difference between MSTR. So if you're just looking at this and you're looking at that price drop, that does show up on your broker app, right? It's showing that if you did buy it around the close of January the 2nd and up to today's price, MSTY is showing about a 57% drop in that price, and MSTR is showing about 39% drop. So if you're just looking at this, it looks a whole lot better to be in MSTR than in MSTY. But don't forget, we earn distributions with MSTY, right along with the other high yield ETFs, right? MSTR does not pay a distribution. So therefore, that distribution for MSTR, well, that's going to be zero, right? That's $0 because you do not earn anything extra to help offset that drop in that price, right? So it stays at a minus 39.78% drop from the first of this year to July 10th. And how about MSTY? Well, how much in distributions have we earned since January the 2nd? Well, we can easily go right over to our chart that we've been entering in those distributions in, find out what that total distribution amount is, and see how much that's going to offset it, and does it help us enough to at least get closer to what it's showing for the ticker of MSTR. Now, I'm just going to go into that individual sheet, add up what the distribution amount was from January the 2nd up until now. So the easy way to get to that individual sheet, I'm just going to go back to my little summary page, and then I'm just going to go to MSTY and go straight to that individual sheet. And you can see if I scroll right up, right there is January the 2nd. So right here, I got paid 40 cents. But I need to add all of these up. Well, the good thing about the spreadsheet is if you click, hold, and drag it right on down, highlight all of those numbers right there, and then you can look right here in the bottom right-hand corner, and it's going to add it all up for you, right? There's a little drop down right there. If it doesn't say sum, you can click that, and you can select whichever one you want. But we're looking for the sum, and that sum for that value since January the 2nd, I've earned a total of $9.6568. So that's the number we're going to enter into that sheet. So I'm going to go back to my sheet right here, and now I'm going to enter in that value we just found out. And that value was 9.6568. Now that's going to help to offset that difference, but how much does it help to offset it? Does it get me closer to that percentage drop that we're showing on MSTR, or are we still really far out? And boom, look at that. Isn't that interesting, right? So if you're looking at this, and as you can see, MSTR does not pay a distribution, so it keeps the minus 39% drop from that closing price of January 2nd till July 10th. But for MSTY, that closing price being $30 and the July price being $12.83, and we earn $9.66 in that distribution, that gets added back in, and that helps to offset this loss right here. So instead of a 57% loss, we are only at a 25% loss once we've added that distribution back in. So if you only owned MSTR, you're at a 39% loss. But with MSTY, we're still at a loss because the underlying is at a loss, right? But we're actually at a lower loss than we are with the underlying. Isn't that interesting? I'm at a 25% loss versus owning the underlying, I would be at a 39% loss. I don't know about you, but that is very interesting. And now that makes me want to check a couple more, right? Now we know that I currently had MSTY paid off, so let's go ahead and let's take a look at HOOY, because HOOY was at a loss for me. If I go back to that summary page, you can see right here HOOY being $32.19 current market price, and I'm at a $34 share price. Now, remember, I have not entered in those distributions, so this has not been recalculated, right? This real price per share has not been updated. That's coming later in this video, but I wanted to show you this new little calculation evaluation sheet that I just found to be very interesting. So let's go to the individual sheet for HOOY, and right here we are. We're going to use that same date, right? January the 2nd. So I'm going to click, drag all the way down, capture all those numbers, and that sum for HOOY is $12.7690. And that's the value I'm going to enter into that little sheet. So here we are on that little sheet. I'm going to keep those same dates. I'm just going to enter in the new tickers along with the new distributions, right? So let's enter in HOOD for Robinhood, and the YieldMax ETF is HOOY. Boom. So you can see that HOOD is down 2.8%, but HOOY is down 32%. That's a huge difference, right? That's a pretty huge difference. Now, I'm very curious to see, are we going to be able to actually beat HOOD after we enter those distributions in? Or will this one actually show that we will be better off owning HOOD versus HOOY? Well, we know HOOD does not have a distribution or dividend, so we'll enter in 0 for that. So that does not change the amount or the percentage that it is down. It is down minus 2.81%. Now that amount of distributions we earned on HOOY was 12.7690. And let's see what it's going to change that minus 32% down to after accounting for $12.76 in distributions. And boom, there we go. We're down 5%. Now, we are down a bit more than we would be on HOOD, but we're not down 32%, right? Because without those distributions, it looks like HOOD is only down 2%, but we would be down 32%. But after those distributions, we're down 5% on HOOY and 2% on HOOD. Now, that puts it a whole lot closer, and once HOOY starts moving back up, then hopefully we can eventually get that one moving into the positive side once we add in those distributions. But that definitely helps the difference in that percentage loss right there, right? Because HOOD, 2%, HOOY, 32%. That don't look so good. But 2% and 5%, that's pretty close. I can deal with that. And the last one I want to take a look at is CONY. because I am down on CONY as well. So let's enter that one in real quick, and then we'll jump right over and update my spreadsheet to get what my new real price per shares will be after entering in those distributions. So let's just clear this sheet real quick. And we're going to keep those same dates. And the underlying for CONY is Coinbase. And that ticker is COIN. And this is for CONY. And let's find out what that percentage drop is before the distributions are added in. And there we go. Coinbase is down 32% and CONY is down 51%. It has dropped over half its value in that price over the period of 7 months. Now that hurts, right? But we do earn those distributions. So what does it actually put us at? Are we again getting closer to Coinbase, or could we possibly beat Coinbase by owning CONY after earning those distributions? I don't know. So let's punch it in. Coinbase, of course, no distributions and no dividend. So therefore, that percentage drop does not change. It only changes as the price moves. It gets no additional help from any kind of distribution or dividend, unlike CONY. But CONY, that distribution would be from January the 2nd. So let's take a look to find out how much in that distribution we earned on CONY. And here we are on the individual sheet for CONY. And here's our distributions. January the 2nd, we'll highlight, drag all the way down, capture them all. And we've got 10.3607. So let's enter that into that spreadsheet and let's find out if that one is closer to the underlying or not. So here we are on the spreadsheet. Everything else is filled in, right? We've got the coin, we've got CONY, we've got the 0 for the distribution of Coinbase. And for CONY, that distribution was 10.3607. I'm very curious to see if that's going to get us a bit closer to that 32% or what. So that $10 distribution is going to help us out a bit, and it's going to mean that new percentage for CONY will be 25.78. So check that out. If I had CONY and Coinbase, and I owned both of them on that same date, bought them at the close of January the 2nd, then as of today, Coinbase, I would be down 32%. But CONY, after capturing those distributions, I'm only down 25%. This is showing me that I'm actually better owning CONY versus Coinbase. Again, very interesting, right? And I like this sheet because it does help you to be able to compare that underlying versus that high yield ETF and find out, are those distributions actually doing anything for you, or are you still down and actually losing more versus owning the actual underlying itself? So I've showed 3 different ones. 2 of the 3 actually showed me doing better owning the high yield ETF. And the only one that actually showed that if I did own the underlying, I would be slightly better. And that was HOOY versus HOOD. But that was only a couple percent difference. Not much difference if you ask me. It's pretty close to being in line with each other, in my opinion. So I thought this was kind of interesting, and I will be looking to add this to that high yield stock tracker sheet, but I'll be looking to do that in the next week or 2. Get that link updated so that it does capture and include this underlying evaluation sheet here so that you can play with it and see what you think. Now it's time to go to the high yield stock tracker sheet, punch in those distributions, and find out what my new real price per share will be for my high yield ETFs that I own. And as you can see currently, I'm at a gain of $25,141. And that is if I did sell out of all of these high yield ETFs. And that's all 15 high yield ETFs. If I sold them all, I would make $25,141. And that takes into account the ones that are positive, like NVDY, PLTY, ULTY, MSTY, and the ones that I am currently down on, and that would be CONY, SMCY, and HOOY. Because the rest of them you can see I am green on. And I'm talking about this cell right here, that big green cell. If it's green, that means if I sold out of that particular ETF, I would make money. If it's red, that means I would take a loss. Now, how much of a loss? That is this row right here, and that's the gain or loss that I would make or take if I sold at that current price. So CONY is a negative $2,800 and PLTY is a positive $1,400. So that is the values before entering in the distributions for this week. So if you'd like to get a copy of this spreadsheet, then come on over, join the Discord. That link will be in the pinned comments and the descriptions below, where you can enter in your own high yield ETFs and find out what your real price per share is. Because as we were looking just a minute ago on that underlying evaluation sheet, you cannot necessarily fully understand your position of where you are with these high yield ETFs without taking into account those distributions. Because when we were looking at that underlying evaluation sheet, it showed that we were losing way more than if you did on the underlying of that high yield ETF. But after evaluating those, comparing them, we found out that 2 out of the 3, we were actually doing better by owning the high yield ETF versus owning that underlying. Only one of them came out pretty close to about break even, with only a couple % difference between the two prices. So to me, I think a lot of this is very interesting to find out, and it's definitely something that you really need to make sure that you are calculating. Because if you do not know what that adjusted price per share is, or that real price per share, then how do you know where you currently set in that high yield ETF? Now you can be tracking it on your own in a spreadsheet that you are making, or writing it all out on paper. And that's fine, but I just wanted to make sure that you are tracking it, because that is a very important number to know if you're in these high yield ETFs, because you really need to understand whether or not you're in the good or not for each of the positions that you own. So let's just go ahead and start right off with CONY. And to get to that individual sheet, as we showed before, you hover over top of that ticker and you click the little pop-up and it takes you straight to that individual sheet. And then of course, to get back to that summary page on any of these individual sheets, you hold your cursor over the back to summary and you click the little pop-up. Takes you straight back to that summary page, and that just makes it quick and easy to hover and jump between the two sheets along with the other sheets. And you don't have to scroll through the tabs to find it. So again, let's start right off with CONY, and let's find out what the real price per share will be for CONY. And as you can see, we earned 27 cents this week. So for CONY, I own 420 shares. So we'll enter in 420, and that is going to drop that real price per share from $26.52 down to $26.24. Now I'm currently still down in this position, but if I did sell CONY at the current price, I would only take a loss of $2,777. Now, of course, I do not want to take the loss, so I'm not going to sell. But you'll see as we go through, I've got more wins than I've got losses, because the total amount, remember, was about $25,000 gain if I did sell out of all of these high yield ETFs. But moving forward, we have PLTY. Now PLTY here is actually paid off, and that means that I have earned more in distributions than I had invested. In distributions, I've earned a total of $2,561 versus the amount invested is $2,244. But for this week, we earned 27 cents, and I have a total of 37 shares. So therefore, that's going to drop this real price per share from minus $8.57 to minus $8.85. It's moving it even further down below that 0 point. So if I were to sell all my shares of PLTY at the current price, I would make $1,439. And that's the power of calculating that real price per share. So however you're tracking your real price per share or your adjusted price per share, make sure you are doing that. But if you do not have a way of doing it, please join the Discord so that you can get a copy of this sheet and track it so that you know exactly where you stand for each of your high yield ETFs. Now for NVDY, we earn 9 cents and I have 71 shares. So that's going to help to drop that real price per share of $9.14 down to $9.05. So if I were to sell all my shares in NVDY at the current price of $12.75, I would make $262. For ULTY, we earn 33 cents and I have 56 shares. That's going to help to drop that real price per share of $27.98 down to $27.64. So if I were to sell all my shares of ULTY at the current price, I would make $56. For MSTY, we earn 20 cents and I have a total of 95 shares. So that's going to drop that real price per share from minus $14.21 because it is paid off down to minus $14.41. And it is paid off, and this here is negative, all because I have made more in distributions than I actually have invested. And that is my goal for all of these high yield ETFs, is to eventually make more back in distributions than I have invested. Therefore, I've earned all my money back, and everything I earned from that point on would be free and clear, just fresh cash coming straight into my account to use however I choose. So if I were to sell all my shares of MSTY at the current price, I would make $2,588. For SMCY, we earn 6 cents, and I have 450 shares. So that's going to lower that real price per share of $5.34 down to $5.27. And therefore, since this one is below the current price of $4.82, I would still take a loss, but I would only lose $203. For AMDY, we earn 87 cents this week, and I have 164 shares. So that's going to help to drop that real price per share of $15.34 down to $14.46. If I were to sell all my shares at the current price of AMDY of $55.56, I would make $6,739. And do note up here at the top where it does state that I only need about 17 more distributions at an average distribution rate of about 90 cents to get this one paid off. Now, of course, that 90 cents is an average of the last 4 distributions. So if the distribution amount drops, of course, this average will drop down, and therefore the number of distributions could increase, right? Because it is stating here that I need about 17 more distributions of at least 90 cents to get this one paid off. Now, once it is paid off, then all the distributions I make from that point on are free and clear, and that's just free powder to use as I so choose. For YMAX, we earned 7 cents, and I have 758 shares, so that's going to drop that real price per share of $5.56 down to $5.49, with the current price of YMAX at $7.92. Means if I were to sell all my shares at that current price, I would make $1,842. I would not be at a loss at a current price of YMAX at $7.92, even though my purchase price average is $18.66. So it seems like I am down in that position, but I have earned a total of $9,900 in distributions, which does help offset the amount of capital I have invested, and therefore that readjusts that $18.66 purchase share average down to $5.49 real price per share, because I am taking into account those distributions that I am capturing. And therefore, if I had to sell all my shares of YMAX at that current price, I would make that $1,842. So that is the reason, once again, why you need to make sure that you are calculating what that real price per share is. For HOOY, we earned 66 cents this week. And I have 151 shares, so that's going to help to drop that real price per share of $34 down to $33.33. So yes, I am still under that current price of $32.19, but look how close I am now. I continue to drop that real price per share, and if HOOY decides to move back up and it goes back up to 34, then I am going to be in the good. But currently, if I did sell HOOY at that current price of $32.19, I would take a loss, but it would only be a $171 loss. But even if HOOY just stays at that current price, as long as I'm still earning those distributions, then I am dropping that real price per share and eventually get below the current price, even though that current price is trading sideways. So by allowing this sheet to tell me where I currently stand and what I need that stock to do, or what kind of distributions I need so that I can get this position turned around, that is the power of this spreadsheet. For QDTE, I earned 20 cents and I have 155 shares. So that's going to drop that real price per share of $18.88 down to $18.67. And therefore, if I had to sell all my shares at the current price of QDTE at $30.50, I would make $1,832. For IWMY, we earned 11 cents and I have 551 shares. That's going to help drop that real price per share of $13.20 down to $13.08. And therefore, if I had to sell all my shares of IWMY at the current price of $19.35, I would make $3,452. Now, that is unrealized gains because in order to gain that, I would have to sell it. But I'm not looking to sell because I am still looking for this one to get paid off so that eventually I can sit back, earn that free distribution money coming in and use it to buy shares, because that is money that I can use that didn't come from my pocket. And that is a great feeling. For QQQY, we earned 13 cents and I have 551 shares. And that's going to help to drop that real price per share of $17.24 down to $17.11. And selling them at that current price of $23.41 means I would make $3,473. For WDTE, we earned 17 cents and I have 540 shares. So that's going to drop that real price per share of $22.49 down to $22.32. And therefore, if I had to sell all my shares of WDTE at the current price of $30.01, then I would make $4,154. For JEPQ, it is a monthly payer on that distribution. So therefore, I do not have one to show for this week. So that real price per share of $7.33 still stands. The current price of JEPQ being at $60.51 because it has increased in that current price value. Therefore, if I were to sell all my shares at that current price, I would make $2,924. And last we have Divo, which is another monthly payer, and it pays at the end of each month, so therefore I do not have one to show for this week. But at a current price of $46.46 and my real price per share of $44.01 means that if I did sell all my shares at that current price, I would make $41.71. Not a whole lot, but I only have 17 shares. But that is still money that's coming into my pocket, but I do have to receive all my capital back before I'm actually truly making any money. And that's true for any of these high yield ETFs or in anything that you're invested into. Because if you don't earn your money back and then some, then you didn't really get a gain. That would be the definition of a loss, right? If you bought it at $100 and it dropped to $95, you take a $5 loss. But in my case, for a high yield ETF, if I bought it for $100 and I sold it and it was at $95, but I earned $10 in distributions, then I come out with a $5 gain. So you can see how these distributions can help to offset that, but that does not mean that it is a guaranteed win position. You do have to do your own due diligence, look into these, and find out which one, or if any, is right for you. So that pretty much wraps up the high yield ETFs. So now let's just go right over, take a look at that summary page and find out what the new gains would be. Previously, it was at 25.1K. And now it is going to show a gain because I did earn those distributions. And that gain would be found on that summary page. And to get to that summary page, we hover right over back to summary, click that little pop-up, and there we go. $25,903. So we just increased it by about $800 just this week in those distributions. And all those distributions are going toward bringing down my real price per share to eventually get to the point where I'm seeing a whole lot more of these reading paid off, right? That is my goal. But if you'd like to get a copy of this spreadsheet so that you can track what your adjusted price per share is or your real price per share, then come on over, join the Discord. That link is in the pinned comments in the description below, where you can get a copy of this Google Sheet so that you can track your own positions and find out where you really sit in each one of your high yield ETFs. So I think I'm gonna wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.